Hey guys, it is Julie here with JT.Wealth. In today's video, I am chatting about 3 top stocks that I am watching for September. So let's get into it. All right, guys, welcome back and thank you so much for being here. So like I said, today we are going to talk about 3 top stocks that I really like for September. Now, I know there are tons of websites and resources out there all doing these top stocks of the week or of the month, whatever the case may be. So this is basically me pouring through all of those and picking out my top 3 favorites. I always think it is really important to be checking multiple sources for your information when you're looking at making investment choices. So I just want to emphasize, make sure that you are doing your own research before picking a stock. I am not your financial advisor. So I just wanted to provide you with my top 3 after the research I did from those multiple sources and what ones I really saw the most value in. Now, before we get into all of that stock info, just want to give you a quick update that we do now have a Discord chat group going live through our Patreon page. So you can find the link to that down below. I'm really looking forward to just growing that community and getting some great discussions going between like-minded investors. While you're at it, make sure that you are subscribed to our channel as we are almost at that 5,000 milestone and I'm really excited for that, and give us a big old thumbs up while you're there too. Okay, now let's talk stocks. So today we are going to cover Bank of America, Cisco, and Upwork. All right, let's start with Bank of America, whose ticker is BAC. Taking a look at Bank of America's chart here, you can see that in March, they were definitely affected by the pandemic, as most companies were. So they came down from about a 52-week high of $35 all the way down to their 52-week low, about $17. Since then, we have seen some recovery up to that $26 mark, but there is still a 25% growth opportunity remaining between our current levels and those pre-pandemic prices. Now, as you guys know, I am a big dividend fan, so I would be remiss if I did not point out that this company does pay dividends. You can see in the top right there, dividend yield is 2.74%, and they did continue paying this dividend throughout the downturn. Bank of America is a well-known player in the financial sector, making it a solid play for any long-term investment portfolio. Further proof of confidence in Bank of America was recently shown by none other than Warren Buffett. Looking at this Motley Fool article, at the very bottom there you can see that Warren Buffett recently deployed more than $2 billion of Berkshire Hathaway's position in Bank of America to nearly a 12% stake, worth about $26 billion altogether, making it Berkshire's largest bank stock holding by a huge margin. Also, it makes Berkshire the largest stockholder in Bank of America. The author of the article simply puts it that he feels Bank of America is more rock solid and well-run financial institution than the market gives it credit for. So if we take a look at some stock price forecasts, you can see right now at that $26 mark, the average is coming in around $27. We have a high rating of $38, low end being $23. But it is kind of split right now between a buy and a hold as far as the analyst ratings. Looking at our stock analysis overview, you can see a couple mixed bags there. Our technicals and fundamentals showing red, but with the downturn we've seen this last 6 months, that's not surprising. Across the board though, we are looking very positive and bullish, very bullish outlooks. If you are a long-term investor looking to get a really solid fundamental company in your portfolio, I think this is a no-brainer. I don't think we're going to see any trouble getting back up to those pre-pandemic levels, so it's a great time to buy right now at that lower price. No one ever wants to buy a stock at its highest price, so this is a great opportunity for people to be able to purchase Bank of America at basically 25% off, still collect that dividend and wait for a return to those $35+ marks. Next up today is Cisco, whose ticker is CSCO. These guys are a multinational technology conglomerate. Looking at their chart here, you can see we had that expected downturn in March, which they actually largely recovered from. And then in August, you do see a sharp drop off. This sharp decline here can be explained by their Q4 results, in which we saw a decline in revenue, some soft earnings outlooks, a bit of surprise news that their CFO is retiring, and about $1 billion in budget cuts. Now, everyone knew that this most recent quarter was going to be rough for a lot of companies, so I don't think any of this is overly shocking, and it's not something that Cisco can't overcome. There are definitely some exciting things on the horizon for Cisco, as they did just recently agree to buy Babel Labs, a California-based firm that uses artificial intelligence to eliminate background noises and enhance voice in videos. So Cisco plans to integrate Babel Labs technology into its WebEx video conferencing platform to further enhance the exceptional video meeting experience. Now, the takeover of this small startup won't significantly boost its revenue, but it does indicate that this tech giant remains committed to competing against Zoom. So this technology is going to really help Cisco, as they did a survey basically and found that 98% of workers experience frustration from distractions during video meetings when working from home. Obviously, this is something that is on people's mind over these last 6 months. So it's definitely an opportunity for them to improve their WebEx, but it's also a defensive move against Alphabet's Google, which just launched an AI-powered noise canceling feature for its Google Meet. And Zoom launched a similar feature in early August. So Cisco's WebEx isn't going to crush Zoom anytime soon, but Zoom investors should be mindful of the tech giant's latest moves, as Cisco has acquired dozens of companies in recent years and still held $29.4 billion in cash in the last quarter. So where does Cisco go from here as far as their stock price is concerned? Well, if we think back to their chart there, right now there's about a 15% growth opportunity to get us back to those pre-pandemic levels. And a good chunk of that is just from this big dip we took in August, which honestly, in my opinion, was just kind of a knee-jerk reaction to some news that fundamentally I don't think is going to affect the company in the long term. Looking at our stock forecast, you can see our average is coming in around $50 or so, about a high of $55, and our low is only $45. So I do love seeing a low that is already higher than the current stock price. We're coming in at a moderate buy with 11 analysts saying buy and 7 saying hold. On our stock analyst overview, we are seeing a couple negatives as far as hedge fund activity and tip ranks investors. Pretty minimal negative sentiment there though. In the big picture, we're looking very bullish as far as bloggers, analysts, news sentiment. Now, outside of just their WebEx virtual meeting technologies, these guys are involved in a lot more than that. They did also just recently announce a partnership with Riot Games, who is the creator of the very popular League of Legends. So basically, Cisco is going to be help powering the future of esports. Beyond that, they are involved with data centers, security, cloud technology, the Internet of Things. These guys have a lot going on. Lastly, I did forget to mention this while I had their stock chart up, but Cisco does also offer a dividend at an awesome yield of 3.41%. Last but not least today is a company called Upwork, and their ticker is UPWK. Now, Upwork is basically like a Fiverr for corporations. So they help companies find top quality freelancers. You can see they've worked with some big companies such as Microsoft, Airbnb, General Electric. Basically, companies are able to put up a posting or a listing for maybe a short-term project or shorter contract, and then these different freelancers are able to go on and find jobs that suit them. Looking at Upwork's stock chart, you can see that there was some decline leading into the pandemic and during, although not the same kind of drop-off that we saw in the other two companies. And once we're into the pandemic, you can see that these guys actually grew a good bit. And I think that's because the need for this type of company really started to increase, especially as more people were at home and looking for different ways to work. So this article really explains Upwork nicely, saying how they fit into that gig economy, which people normally think of drivers for Uber or Lyft. However, freelance work comes in all shapes and sizes. So companies looking for a contract worker with a specific skill set on these short-term projects may not know how much compensation to offer or how to find them. So this allows companies to post those descriptions, and they receive confidential bids from contractors interested in the work. Companies can interview, hire, and even pay the freelancers through Upwork's site, and it's proven to be a popular model. During Q2 2020, Upwork's revenue increased by 19% year over year, exceeding management's expectations. So that 19% year over year growth was really exciting, but what helps stoke more excitement for this company is management's future outlooks. During the recent earnings call, Upwork's CEO made a point to reiterate that they expect a sustained revenue growth of 20% and more in the years to come. Now, analysts are presently estimating Upwork's revenue growth will slow down a little bit to 15% over the next 2 years, but anywhere in that range is still really impressive year-over-year growth. Looking at our stock forecast, you can see the average is coming in around $18.43, high of $20 and a low of $17. So again, I always love seeing that low being above where we're currently trading. We have a moderate buy rating with 5 analysts saying buy and just 2 saying hold. Taking a look at our stock analyst overview, we're seeing almost green across the board. So we have very positive outlooks, bullish and very bullish sentiments there, increased hedge fund activity, and some insiders buying shares as well. So Upwork is definitely a newer company and not as well known as the other 2 stocks that we mentioned, but I do think they represent a really neat opportunity in the workforce and how things are shifting towards more distant remote working, finding outsiders to come in and help complete projects, but not actually being in your office. Reiterating that point, we have MKM Partners with a buy rating and a $20 price target on Upwork, and their analyst says that it's still in the early days of capitalizing on an economy that is more open to remote, flexible, on-demand workers. Now, the analyst sees Upwork's enterprise-focused customer base as a long-term positive, albeit one lacking instant gratification for investors. So this is not one that we're going to suddenly see shoot up an insane amount, but I think long-term could be a really solid play. So those are my 3 top stocks that I'm looking at for September. I think each are in a different sector and offer a unique opportunities for some really good long-term growth. I would love to hear what you think though. What do you think of these 3 stocks, and what are some others that you're keeping your eye on? If you made it this far, please make sure that you are subscribed to our channel so you can stay up to date with all of the latest videos. Make sure you give us a like and have an awesome day. Cheers!